Today, Bitcoin slides back to $66,000 to end the week as it continues to wrestle with the $70,000 level. And Matthew Hougan with Bitwise discusses regulatory progress in crypto from Coinbase's State of Crypto Summit in New York City. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices in the red to end the week, with Bitcoin hovering under the flat line as of noon Eastern at the $66,000 level. For the week, Bitcoin and Ether slid 4% and 6% respectively after a sell-off earlier in the week that was partly triggered by a wave of long liquidations. Well, in addition to the Bitcoin liquidations we saw recently, miners have been showing signs of capitulation as Bitcoin fails to maintain the $70,000 level. Earlier this week, data from CryptoQuant showed the flow of Bitcoin from miner wallets to exchanges hit a 2-month high, and miner selling through over-the-counter desks saw its biggest daily volume since March. I spoke with H.C. Wainwright analyst Mike Colonnese about the challenges miners have been dealing with post-halving and how that's reflected in the selling trend we've been seeing.
When you zoom out, Bitcoin has essentially traded sideways since the halving event on April 19th, when the block reward that miners received to secure the network was cut in half to 3.125 Bitcoin per block, down from 6.25 previously. So the miners are now competing for 450 Bitcoin per day network-wide versus 900 less than 2 months ago. And while rising transaction fees have helped to offset some of this impact, mining economics have effectively fallen by 45% compared to pre-halving levels. So we're really not surprised to see some of this forced selling in the market here in terms of both current production as well as Bitcoin that was previously held on balance sheet from some of the miners, as miners effectively look to cover operating expenses and to some extent CapEx with the proceeds of these Bitcoin sales.
All right, let's jump right into more content from the Coinbase State of Crypto Summit in Lower Manhattan for our main story. CNBC's Kate Rooney sat down with Coinbase CEO Brian Armstrong at the event to discuss the demand and acceptance of digital assets by executives in the traditional finance world.
The vibe is, it's good here. I mean, 56% of the Fortune 500 are now doing something on-chain when we go and survey executives from those companies. So the biggest companies in the world, whether it's, BlackRock tokenizing real-world assets, JP Morgan is doing things on-chain with Onyx, Google Cloud is accepting crypto payments, fintechs like Stripe and PayPal are doing things with stablecoins. So I think crypto is here to stay, and the biggest companies in the world are all integrating it.
Kate also sat down with Bitwise Asset Management's Chief Investment Officer Matthew Hougan at the conference. They discussed Wall Street sentiment toward crypto and the regulatory developments in the U.S.
What are you hearing in terms of some of the reservations that still might exist when it comes to crypto, whether it's the reputational risk, the risk of safety, not enough regulation? What is sort of the top concern you hear from more institutional investors?
Yeah, I actually think it's just the passage of time, believe it or not. I think a lot of institutional firms started their due diligence in January and February after the Bitcoin ETFs were launched, and that process takes 6 to 12 months, not for crypto, for any new asset. So I think the biggest one is the passage of time. But I will say that Wall Street has its eyes on DC. There was a real change in sentiment when we saw sort of bipartisan progress in Congress around comprehensive crypto regulation. I think once that comes into the fore, you're going to see this trickle of institutional assets turn into a flood.
Do you feel like it's bipartisan? We heard Brian Armstrong on stage and some other Coinbase executives say that. Seems like former President Trump is sort of taking a stand here and trying to frame himself as the more crypto-friendly candidate. What is the feeling in the industry? Is there a lot of buzz around the presidential election and what that might mean?
There is a lot of buzz around the presidential election, but there is more buzz around the bipartisan sort of consensus that built around the FIT21 bill in the House. We had 70 plus Democrats cross the aisle. Ultimately, if you want to get something done in politics, you're going to need bipartisan consensus. And the good thing for crypto is underneath the surface, after we get away from Washington, it's owned on a bipartisan basis. The demographic that owns crypto is strongly bipartisan. And I think that's starting to be reflected in Washington. And that means, I think, we're going to see real progress in the next 12 months.
It seems to be a demographic difference too, right? As you said, not necessarily political, maybe just younger investors are more open to crypto. Is that something you found?
That's absolutely true. And we actually saw that in Congress. There was stronger alignment on demographic grounds in terms of who voted for that FIT21 bill than there were along party lines. I think the average age of a representative that voted for it was 51, and the average age against it was in the mid-60s. Again, that's a good long-term trend for crypto. I think it pushes us higher.
Yeah, really interesting. I want to talk about Bitwise as well and some of the inflows. Give us a sense, the past 6 months, of what you've seen in terms of the success of Bitcoin ETFs and what you guys are offering as a product.
Yeah, first of all, two things. One, these are the most successful ETFs of all time, which is really remarkable, right? There's been thousands of ETFs launched over 30 years, and the fastest growing ones of all time are these Bitcoin ETFs. That tells you just how much pent up demand there is from professional investors to access this asset class. What we're seeing right now is something really interesting. There's a huge wave of flows, primarily from retail investors, in January, February, and March. And then they took the foot off the pedal. We had a period where we sort of chopped sideways, but we're seeing a re-acceleration of flows in the last few weeks, and I think it's gaining momentum. What I think that is, Kate, is the people who started their due diligence, the RIAs, the institutions, the hedge funds, who started looking at this in January, they're now wrapping that up and they're starting to allocate. That's the reason I think we're going to see maybe even stronger flows in H2 than we did in H1. We're seeing the professional investors come in and drive the flows.
Very interesting. The passage of time, as you said, what is sort of the investment thesis that you're hearing from folks? It seems to be still that allocation of maybe 2 to 5% as a risk asset versus digital gold, any sort of store of value. Is that fair to say, and what are you hearing?
Well, you know, at Bitwise, we speak to financial advisors every day about crypto. We've been doing it for 7 years. And when we talk to them about BitB, our ETF, there are really two things that come into fore. The first is massive concern about rising debt, deficits, and the long-term outlook for the dollar. Investors feel that, and they need a way to hedge that. And Bitcoin has been the fastest horse in that race, the best way to hedge that for the last few years. You know, since COVID, the dollar has lost 25% of its value. Bitcoin's up 700 or 800%, so it's been a great hedge. That's one major catalyst. The other one is really simple, which is people are just looking at supply and demand. The supply of Bitcoin is basically fixed, right? And actually the rate of new supply fell in half in April, and yet we have trillions of dollars of institutional capital that needs to find its way into the market. So some people are looking at and saying, this is the easiest trade they've seen in a while. Other people are thinking, how do I hedge that risk to the dollar? Either way, it adds up to significant inflows.
What about Ether ETFs at some point? What's your anticipation for any sort of success there, and how would it compare to some of the Bitcoin offerings that are now available? Give us a little bit of what to expect on the Ethereum side.
Sure, when you think about professional investors, what's the first thing they learn? They learn diversify your exposure. No one holds one stock or one bond. They hold a portfolio of stocks, a portfolio of bonds. So we expect a lot of people who own Bitcoin ETFs like BITB to also allocate to Ethereum ETFs just on that simple diversification principle. Now, if I had to guess, I think there'll be a little bit slower acceleration of flows into Ethereum ETFs if they launch than we saw in Bitcoin, because there's more to learn. It's a more complex asset, it has different use cases, but you can be sure almost all professional investors are coming into the crypto market. They're going to want 1 to 5% exposure, and most of those are going to want to hold both of the largest assets, Bitcoin and ETH.
Is there room for Wall Street to get into crypto beyond that? It seems like there is some comfortability with Bitcoin, at least. I've heard some people call it boomer coin at this point. That it seems to, at least its reputation has gotten better. It seems to be sort of pegged as the safest, the biggest, the oldest. But there's about $1 trillion worth of other assets that might not be as palatable. What's your take on if Wall Street will ever get comfortable with that side of it?
I think they'll get comfortable with it. I think you'll see them look beyond Bitcoin and ETH toward things like Solana as they start to understand some of the non-financial applications of open blockchains. And I think that will resonate. The other place I think we're going to see huge investment, including from the largest financial institutions in the world, is in stablecoins. That's a $150 billion market. I think that will be a multiple trillion-dollar market in a few years, with big names like JP Morgan and Bank of New York and others trying to find a foothold in that space. So again, it's the same story. Trillions of dollars of assets looking to find their way into crypto. It's going to be Bitcoin, ETH, Solana, stablecoins, and other applications we're not even thinking about today.
Okay, that's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.